nowadays they don't teach you any of this stuff in school.
No.
Yeah, and true freedom starts with financial freedom as well.
Yeah.
So ultimately speaking, if you get that down packed, you have that under control, you get whatever you want.
Amen. Amen.
So I guess we could start from the beginning, Steve. So let's say someone's watching, right, and they're thinking about starting a business. Maybe they even already did start a business. How should they go about registering their business and making that segue over while they're still an employee?
So the first thing you want to do, and I'm going to start with this. He was talking about him being a W-2 employee and then doing a side gig, side hustle. So, I would imagine that this show is going to be speaking to you guys. So if you're going to do something like that, there's a specific way to go about doing it. And it's an area that always causes a lot of confusion.
Yes.
So I'll
mess me up too.
Yeah. So when I was like in my early 20s, I started a business with my brother. We didn't know what the hell we were doing. We didn't have access to YouTube and videos and like that. So the first thing we did to start a corporation in New York State, no less, was see a lawyer. And we winded up spending $2,500, and we only had like $20,000 collectively to spend on this business venture. Mm-hmm. So we started there, and he got us incorporated, gave us a book of like stock certificates with a stamp on it, and I brought this. It was really good looking, like hardcover binder for my corporate documents and all this stuff. And I thought, this is all I needed. I wasn't a CPA at the time, so then I had to go see a CPA, and the CPA said, "Yeah, never do that again." And I said, "Well, why?" He goes, "Well, you just wasted your time. You don't need stock certificates unless you're going to sell them." And I said, "Well, it's just me and my brother." He goes, "Well, you don't need that." He goes, "All you need to do is get an EIN number," and then he made us an S corp. So he basically walked us through the process of what I'm going to talk about today.
Okay.
And kind of what we talked about when you were starting your fitness business and you were structured as an LLC. So most people think that, I got an LLC and it equates to tax savings. An LLC does not equate to tax savings. An LLC is just a form of entity that you can form. You could do it, and every state has their own limited liability company. You just get on the State Department, and you can. And this is what we're going to talk about on my channel in more detail. But that's the first step you do is you select the name that no one else has in that state. You form your LLC, make sure that name is available. You pay your fee online. Typically at the Department of State, they all pretty much have the same type of format and website.
Yeah.
And
every state is different, state by state.
Yeah. And then you get your articles of organization back. So now with that LLC, what you want to do is you want to make it an S corp. The only reason I would tell you to keep and stay as an LLC is if you want to invest in rental real estate property.
Bam.
So that's what you have.
So that's very important because I made that mistake. So a big mistake that a lot of people make, right? You come from the W-2 world, right? Where you have a regular job, right? And you're like, okay, they take my taxes out for me. I don't got to worry about anything. And then you go over to entrepreneurship. The first thing people do is they think I'm going to make an LLC. But you're saying, no, you can start with the LLC, but what you need to do is transition it over to an S corp.
Yes.
Especially when you're a W-2 employee. Can you tell the people why that's so critical and why that's so important? Because I made that mistake myself in the beginning.
So if you're going to invest in real estate property, for every property that you have, you want to have a separate LLC. You want to separate those to gain the maximum amount of protection because that protects you and your personal assets from the actual asset that is over that particular rental property. Yeah. And let's say you have an incident where the tenant comes out and maybe they fall and break their ankle or break their knee or whatever, and they want to sue. So they can only sue the LLC of that particular property. You may have multiple properties, such as yourself, where they can't reach over that. So it's limited liability. Lawyers started the limited liability in most states. And the reason why they did it is because they went into practice together and they were partners, and they didn't want each other's clients that may sue them coming after each other. So it limited the liability for each. Okay. That's really
actually how it started.
Of it. Yeah.
Okay.
And then they applied it to real estate as well.
Okay.
But you could get the best of both worlds, because if you're going to operate a business where you're getting income from an operational business, not a rental property, then that's where you want to take that LLC and convert it into an S corp.
I think the first person I heard talk about LLCs was Robert Kiyosaki. Obviously speaking, wants to protect your assets,
right?
But
real estate,
we didn't know how to really do it, or how it made sense for us as regular business owners.
So it's okay for them. to start off with, create the LLC, right? They can go on their website, do it. Don't hire an attorney, do it. You can literally do it by yourself. I know LegalZoom will let you do it.
You could do LegalZoom if you want to. You don't really need to. And what I'm going to do is I'm going to do,
because you've done it for me a bunch of times. It takes like 10, 15 minutes, not even, to create an LLC. It's very easy, guys. You go on the website and you do it. You pay the filing fee. You get your articles of organization, which is basically, think of it as like the documents that prove you have a real business entity. Now, once you have that, how long can they have the LLC before they switch it over to an S corp, in your opinion?
So there's a time limit on that. So you can I've taken it out into 2 years where you can get like elect for forgiveness. But there's certain things that you have to mark you should do it as soon as possible. Okay. And a lot of times I get clients because, again, they go to an attorney, they form an LLC, and then at the end of the year when they come see me, I ask them, are you an S corp? And they're like, I don't know what are you talking about. Yeah, I think I am, right? And I'm like, okay, let me check. Did your attorney fill out these forms? Well, 9 times out of 10 they don't.
Because lawyers don't know anything about taxes.
Yeah, and we're coming in maybe a year and 3 months or so later, and then I have to fill out the forms, and then they have now a provision, because it's so common, that the IRS actually added on their form 2 sections where you could just check the box and say, we're doing a late filing election. So you start off with LLC, so they got to hopefully get it done within a year, right? And you're saying up to 2 years. A year, yeah. You can to 2 years, but you got to make sure that certain forms were filed in a certain way.
Okay.
I'm not going to get into that in detail, but that's typically, in most cases, 9 times out of 10, it's going to be a year later, and we could pretty much get the S corp.
And I remember with me, like, I was almost at the end of my time limit,
right?
And we switched it to an S corp right before, because I had a LLC, guys, that I had started for my fitness business, and then Steve saw I got Steve as an accountant, and then he saw I was set up, and he was like, "Dude, you still have a W-2 job and you have an LLC. What are you doing?" And then we switched over to an S corp, and we'll talk about that here in a second, guys. Real quick. All the chats that come in, we're going to read them. I'm going to read them here in a second, but go ahead and get your questions in, guys, because this is a fantastic opportunity for you guys to ask a real CPA who works with real clients, who from a small business angle and real estate. You can ask them all your questions. So all those questions you guys ask us about starting a business and everything else like that, they did ask these questions. So going back to the LLC, so you do it within a year, sometimes up to 2 if you have certain things in place. So why is it so important to switch over to an S corp from that initial LLC that they create?
Great question. So because so first off, let me skip back just a second. The LLC for rental property is okay, because they construe that as passive income. So that's not subject to self-employment tax.
Okay.
So those are okay, because you're going to have a special schedule on your 1040. We don't need to file an S corp return. We just put the rental income, rental expenses.
So having a real estate property under an LLC is appropriate. However, when we're talking about an S corp, an actual business, different.
Right. So now that's where, if you don't make the S corp election, you have to put all of that business activity, the income and all the business expenses and the profit, right inside of your 1040 on a Schedule C form. And I think we had a show and we talked about this. That's the #1 audited form in the entire IRS. That's the one that probably 75% of people that get their 1040 audited.
And what is a 1040 form?
1040 is your personal income tax return that everybody that has a job and you get, you're making over a certain amount, that you have to report your income on a form 1040. Okay. So if you have a side hustle and it's an LLC and you didn't make it an S corp, then you have to put your business activity in your 1040 on a certain schedule called a Schedule C. And that schedule is what is the most audited schedule. It's like out of all of the forms that get audited in the IRS, it's the #1. Yeah, I detest it. Like, everybody that does that, I'm like, you need like, some people are like well past the time limit to do an S corp election, and I make them form a new corporation with a brand new name, with a brand new EIN number, open up a brand new, and it's a pain in the ass, but I'm like, listen, you're going to thank me for this later, because you need to file a separate form.
Gotcha. So if they don't, let's say they stick with that LLC and they have their business and they have their W-2 job, that LLC income now has to be put in their 1040, which they're also earning income from their job, and that can mess them up.
Correct.
So you're basically putting both of your income streams on one form that shouldn't be put for 2 different income streams, and that form is the most audited by the IRS.
Correct. There's 2 departments of they call it they don't even call it auditing, they call it examination. So there's 2 examination departments. One that is in charge of auditing personal income tax returns, which are the 1040s. And with that comes the Schedule C in there. So that gives them jurisdiction over your business. I've had people come into my office with like their top line for gross revenue was over $1 million. I'm like, dude, what are you doing? You're filing this on your personal return. So now you have a guy auditing a pretty good sized company that really doesn't have a lot of experience in the IRS, and they're going through everything, and they could turn your world upside down.
Oh my God.
Yeah.
Okay. So
you see what I mean?
Yo, where are y'all gonna get sauce like this anywhere else, bro? You would have to bring an actual real and here's the other thing. A lot of accountants aren't gonna share this with y'all. They might not know this stuff. Like, this is a big mistake that a lot of people do. They start off a business, it does really well, or maybe even they make an extra $30,000, $40,000 a year. Well, guess what? It gets put on your personal tax return with your regular job, and that is the most audited form. And then they're like, yo, what the hell? You got all this extra income. What's going on? And then next thing you know, bam, you're getting audited, because they don't look at it like it's a business, right? They look at it like this is, wait, you're making more money now. What's going on here?
Right.
And if you don't know, you don't know. It's funny because when I spoke to Steve for the first time, I was like, Steve, please, I don't want to end up like Wesley Snipes. Please save me, bro.
And stuff like this will literally jam you up. So so that's the importance of switching over to the S Corp. So when they switch over to the S Corp, what does that basically do for them? Does it separates that business?
So it does two things.
Okay.
So one of the greatest, obviously, it's a tax savings, and it's very significant. So when you obviously now you're taking that S Corp and you're having to file a separate return. So now your return, it's going to be an 1120S. That's what it's called. These are the form numbers. You guys can write that down and look it up. But that's where you instead of doing the Schedule C on a 1040, now you move that over to its own tax return, and you file. Now that goes to the business side of the examination of the IRS. Those two shall never meet. They don't even communicate with each other. It's two separate departments.
Gotcha.
You being the government guy, you know how important that is.
Yeah.
So that's kind of where you divide and conquer. And
because instead of making, let's say you make an extra $100,000 with your business, right? You're going to be a big fish in a small pond, putting it in a 1040 in your 1040, right?
Right.
And then it's going to be audited to fucking hell.
Right.
Versus you put it in you file it as a separate business.
Right.
Now you're a small fish in a big pond because there's a bunch of other businesses that are getting put there alongside you, and you filed it appropriately. This isn't illegal stuff. You're doing it the way it should be. You're separating the two.
Correct. So the other reason is obviously for the tax savings. So we use very simple numbers. Let's say you make a profit for $100,000, right? So if you file that on your Schedule C on your income tax return, you're going to pay $15,300 in self-employment tax, even before you start paying regular income tax.
Oh,
so forget about the income tax. You're going to pay self-employment tax because you have no control over that. You got a $100,000 profit. All of that $100,000 is subject to self-employment tax. Well, what is that? That's like the W-2 wage earner. When you look at your check and you see where they take the Social Security out and the Medicare, that's basically the self-employment tax. That's FICA, Medicare. So when you become, you have an LLC and you're self-employed, now you're picking up not only the employer portion, but you're picking up the employee portion of that. So it's 15.3%. So
that's just getting taken right off the top.
Correct.
And you're getting hit with it twice. Almost.
Right. Well, once you're self-employed, you have to pay that. So now what you can save in this one, you'll save like $7,650. I'll use this example. File it on an S Corp return. You have to pay yourself a reasonable wage. So you have to give your own self for running that company a reasonable wage, a wage that you would pay someone if you were going to hire them to do that job,
like a CEO or a manager,
whatever it is. You're the president of that company, and whatever that company is. Let's say you have, you're a doctor and you got a medical practice. What would you pay someone to do that job, or so on and so forth?
When should someone start paying themselves from their company?
So that's a good question. Obviously, if you're not profitable, and typically when you form a new corporation, typically the first year you're going to have more expenses than you do income, and you might have a slight loss. That's why I like to have that on a separate return, because then you get the slight loss. It comes through on a K1 form, and we attach it to your 1040, versus having a loss on your Schedule C, and then it's netting against your other W-2 wages like you had with DHS.
Yep.
That looks bad. Now that's a red flag. That's why because a lot of the IRS looks at that Schedule C as a way of people that are W-2 wage earners getting their income down, their taxable income, because you have no control. When you're a W-2 wage earner, you can't get your income down. It's already reported on that W-2. There's nothing you can do. There's really very limited ways for you to get your income down, and that's one of the ways that people do. They'll file like this little schedule on there, and then all of a sudden they have a loss, and then they'll, maybe they have $150,000 W-2 wage and a $20,000 Schedule C loss. Now they're getting their income down.
Gotcha. So you want to avoid all red flags that might come up with the IRS to say, you know what, let's audit this person because of these things coming up on their account.
And that could be a legitimate loss. And I think we talked about this. I had a real estate agent where she was, trying to sell real estate when the economy crashed, and she didn't sell anything, but she incurred legitimate costs. And she was renting, paying desk fee, this, that, and she had a loss. Her husband was making like, I don't know, $400,000 or $500,000 as a doctor. And she had like a $35,000 loss, Yeah. They were legitimate. She had all of the receipts, everything. And it got their income down. And, so they saw that as an opportunity, and she got audited. She could have fought it. She didn't. She was like, I don't want to deal with it. So she just paid, the penalties and fines and everything.
Wow.
She doesn't want to deal with it.
Yeah.
Versus if I would have told her, you should have been an S Corp. I don't know who you talked to, who did your stuff, but we could have filed that on a separate return, take the $35,000 loss, put it on a Schedule K1, and they would have left you alone.
Isn't it amazing how the vast difference just by setting yourself up correctly, when you set yourself up correctly from the beginning, it avoids long-term problems versus if you set yourself up incorrectly in the beginning, it might be easier. Oh, I just made an LLC. Now I'm a business owner. Woo. And then you file your tax return. Next thing you know, they're like, oh yeah, we're going to go ahead and audit you because you made way more money. And okay.
But we're told to get LLC as a business owner and just do that. However,
it's great. It's great because you get the best of both worlds. So if you're going to run a business and have an operation, then I would say, be the LLC, get the extra limited liability protection for your assets, and also just convert it into an S Corp. So in that case, we were talking about the second instance of the $100,000 case, $15,000, $300 extra tax bill you're paying, versus if you did it on an S Corp, we could take $50,000 of that and deem that wages. So you only pay $7,650. The rest is just income. So you don't pay that. So you're just in that case alone, you're saving $7,650.
Okay, hold on. Let me just hold on. That was very important. I don't want none of this stuff to get glossed over because you're giving these guys so much important information. I really want to hone this home because I'm hoping that this episode is going to be something people can go back to continuously, right? And we're going to put very detailed timestamps on this episode for y'all. So, two scenarios. You make $100,000, right? One is an LLC, one is as an S Corp, right? Assuming you made the LLC, then you switched over to S Corp. In the first scenario, where you're just a regular LLC working a job, let's say you make $100,000 extra right from your business, you are going to be subject to paying $15,000 in, you said self-employment tax, right?
Self-employment tax.
Automatic, without a shadow of a doubt, that's coming off. Yep. So you're going to only net about $85K, and that's before all the other taxes that come in, right? So $15K is already gone. However, if you had switched it over to an S Corp, you would only be paying about half of that at about $7,600.
It's an automatic $7,000. Yeah, because I would say just let's take 50% of your 100,000 and deem that taxable for self-employment tax.
Okay.
Because you could do that on S Corp.
Okay.
And the IRS says you have to pay yourself a reasonable salary.
Yeah.
And a lot of guys don't do that, and they've been getting away with it. But I think now with Social Security and the situation that it's getting, we're getting a lot of little notices and stuff like that saying that, you need to, I think at some point the IRS is going to come back and probably claw back a lot of these returns that were S Corps where the owner didn't pay himself a reasonable salary.
Okay.
And there's a way to do that. Like you should go on and see like what is really the market rate for that position.
Okay.
And the IRS can push and shove on that. But I think if you put something in there, more than likely they're going to be like, just leave it alone. Yeah. But if you put a big goose egg on there, they're going to be like, gotcha. Now we're going to get you. And how much did you take in distributions? Oh, you took 100,000. Okay, that's going to be W-2 wage. Now you owe us that plus penalties and interest, and it's a 25%
okay
for a misstatement there on top of the 15.3% plus the interest.
So we're talking about just off of $100,000 profit, you're saving $7,500 that you would have had to pay, double that if you had stayed as an LLC.
Right.
And then not to mention, and you can't, I guess, also with the S Corp, you were saying that you set yourself up for better tax mitigation as well, as far as like, is it easier to write things off? Are there any other benefits?
They're about the same because both, if you look at a Schedule C on a 1040 and you look at the it's just basically a profit and loss statement.
Okay.
The only thing with the Schedule C, you don't have a balance sheet.
Okay.
But you have a balance sheet for the S Corp. That's the major difference.
Okay.
But you still can, take the same deductions.
Should someone switch over to an S corp even if they're not a W-2 employee? Let's say they start their entrepreneur venture and they quit their job and they say, you know what, I don't even want to work a W-2 job anymore. I'm going all in on this.
So what I would say is, yes, they can. But I would say when given the opportunity, if you have an opportunity with whatever your employment relationship is with someone, and I'd say this to everybody, always side to be treated as an independent contractor. If you can negotiate where they can pay you as a 1099 independent contractor, then do it. And here's why. Because by not doing it, you're getting a W-2 wage and you have very limited access to get your income down. But when you become an LLC and you're treated as an independent contractor, you basically open up your whole business to the whole tax code to take advantage to get your income as low down to near zero as possible. You can't do that with a W-2 wage.
Okay.
So if you have the opportunity, if you have a gig and you're like, oh, the guy said he'll pay me a W-2, put me on the books and pay me as an employee. And I always ask them, I say, is there an opportunity for them to pay you as an independent contractor? And they're like, yeah, I could talk to them maybe. And I'm like, well, then do it. Then do it.
Okay.
Then we have the whole tax book where we could just write everything off that they can't as an employee.
Right. Gotcha.
You know,
and you know what? Now that I think about it, when I was an agent, right, and I had my W-2 thing, so they assign you a 6 hour. I didn't like that gun. I was like, this gun sucks. So I went ahead and bought my own Glocks, right? But I couldn't write those off.
Yeah.
And I think years ago you could have been able to do it, but like by the time I bought those Glocks and switched over, you couldn't, and that was because I was a W-2 employee.
These are very limited. I mean, the only thing you do is like, if you have a 401k with matching and stuff like that, that's a different story. But if you have an opportunity, if they don't have any of those benefits, like that, then just try to become an independent contractor. And most employers, would opt for that because that's less liability on them. That's less hassle. It's just so easy. Like, oh, I got this guy. Just give him a straight check, give him a 1099 at the end of the year, and
wash your hands of it.
It's a lot,
and they don't have to pay you benefits or anything. So it's better on their end too. So for the guys out, so should they always just switch over to an S corp? It sounds like to me. Even
always.
Okay. So even if
you're a business, always.
So even if you're whether you're a W-2 employee, well, you definitely want to do it if you're a W-2 employee. But if you're just an entrepreneur, serial entrepreneur, don't have a W-2 job, you could start as an LLC, but always at some point, if it's a business that's generating money, unless it's real estate, that's the only exception to this rule. Exactly. You need to switch over to an S corp in almost every scenario.
Absolutely,
okay. Yeah. That's fucking sauce right there, man. Yeah,
that's great.
Yeah, that's really life-changing information. And I'll tell you guys this from experience. I made that mistake where I had done it as I was an LLC, right? And I wasn't an S corp, and I was wondering why was I paying so much in taxes? And I'll never forget that first year I went to H&R Block. I think I made like $30,000 to $40,000 extra for the first year with my fitness business in 2019 because I had started mid-year, and I paid a bunch of taxes. And I was like, "What the hell?" And then it was because I was set up as an LLC, and I had never switched over to an S corp.
Right. Let me ask you guys a question because I don't even know because I look at it differently. What's your view of H&R Block? Like before you knew me, going there as far as like them being a professional tax company to prepare your tax return. How did you feel about them? I
think if you're a guy and you have a regular job and you just don't want to deal with it, they're good to go to. But if you're an entrepreneur, you need you 100% need a legit accountant that deals with entrepreneurs.
I agree with you. And then because we over the past years, like we look at the H&R Blocks and Jackson Hewitts, to see what they're charging and their rates to see how competitive we are. Everybody does it in our area.
Yeah.
So it's pretty much most areas are going to have pretty much the same level. But I noticed that H&R Block in our area, for instance, we weren't really saving any money at all.
Yeah.
And the thing with the H&R Block is like you have a person potentially that's only gone through a 13-week tax course and they're preparing your return.
Yeah.
So they have very little experience and you don't know it because they're just following whatever they, there's where I would never have someone after 13 weeks in my firm preparing returns for anybody.
Yeah.
I will have them preparing them, but I'll look at them. We have a level of review like, okay, you prepare it. You're going to give it to so-and-so, and then I'm going to look at it. So we have levels of review. They don't do that at H&R Block. You're not getting
they're trying to get volume.
Correct. And a lot of these people, what they do is they take that course and then they'll do spend a season there in H&R Block, and then they try to leave to go, hang their own shingle or do their own side tax prep stuff. So then the next year you go back and you're getting somebody totally different.
Well, I mean, okay, you know what? Let's just use real world things here. So when I was an agent, right? that first year that I had done a tax return, I made somewhere between like 120 to 150 gross.
Yeah.
Right. Because I had my fitness business as well. I made 120K as an agent. I think I made about like 30 to 40K with my fitness business. And this is 2019, right, guys? Because I started the business June of 2019. And then I was also working as an agent, making about 120K per year. So we're talking about 150K gross. I paid that year, I think like 36,000 in taxes, right? 36,000 to 40K in taxes.
That, yeah.
And I think I showed you, hey, this is my 2019 tax returns, right?
Yeah.
Because the first year I worked with you was 2020. We paid just that same amount of taxes this year, making 10x.
I always do a comparison.
Yeah,
I'll do it side by side just to as a final check, and then I'll point that out. Like, wow, look at
guys. I made pretty much last year made over an M, right? And I paid about 36 to 40,000 in taxes. So I pretty much paid the same amount of taxes as I did when I was an agent with a W-2 job and just starting my business, making about 30,000, right? 150 gross, as I did making an M. And if that doesn't show you that fucking a guy like Steve knows what he's doing, right? Obviously all legal because I'm using real estate, I'm an entrepreneur, etc. I get heavy tax reduction. Then I don't know what does. I think H&R Block is great for a guy that just doesn't want to deal with it and is a regular W-2 employee and it's easy. But once you start getting into real estate, you're a business owner, etc., and things get more complex, like H&R Block isn't going to do cost segregation for you.
No.
They're not going to do depreciation. They're not going to be able to help you with writing off expenses for your business. So
no, it's not like you go to your H&R Block, towards towards the end of the year, my bigger clients, I'll send out notices and we'll sit down right before the year ends to see where they're at, to do some tax planning, and then to see if they need to buy more equipment, pull back, see where they're at, see if, make estimates, things like that. So, they don't do any type of tax planning. That's very important.
Yeah.
It comes in towards the end of the year.
Yeah. So, I mean, me and you've been on the phone before planning like, hey, you should probably spend some money before the end of the year, etc. Any equipment that you want to buy, go pick it up now. I remember when we were buying the cars, pick it up now before the end of the year. Like all this stuff is imperative because it will set you up, right, to pay a smaller tax bill in the future, guys. And again, this is all legal. I told y'all before, when you're an entrepreneur or if you're a real estate investor, what ends up happening is you are the cornerstone of the United States economy. Small businesses, real estate, small business, real estate, bam, you hit this corner right here and you're able to create jobs, create housing for people, and you get huge tax breaks. And that's why I was able to pay less taxes now than I did when I was an agent as a W-2 employee.
I think the allure is for H&R Block is that on some level it's streamlined and it seems to be easy option because you just go there, get your documents, information, and they do it for you. But ease of access leaves you open to missing out a lot of opportunities. So
right. They do tremendous marketing too as well. So they're out there.
They got numbers.
Yeah.
Yeah.
I think they're talking about real estate, the most millionaires are in
90% plus. Yeah. Should we talk about because they've asked me this question a bit. You want to talk about our strategy that we're doing right now with the real estate?
Sure. Yeah.
Fuck it, we'll do it.